Hey traders, Nick Shaheen here looking at Pfizer. They made news this week. They announced on Monday, surprise, the fact that their vaccine could be 90% effective on COVID, which was well received by stocks and especially the small caps and the Dow. They rallied very like I haven't seen before. In a matter of hours, the small caps hit limit up and they basically had a 10% rally and immediately erased about half of it, and now they're about half of it. So strong move. Just shows the emotion that's in the stocks right now. So how does that affect Pfizer? Is this a good time to buy Pfizer? It's hard to pinpoint the perfect time to buy anything, right? And if I'm looking at it, this is a daily chart. This is Pfizer. Every candle is one day. Eyeball, it's like in the middle of the range, so I'm not really making a major mistake either way. So how about we get a little smarter though? So 3 days ago it was 36. Hours later, when it opened on Monday, it was 42, and now it's 38. So somewhere in the middle lies the truth, as they say. Yes, there's a gap opened here. Doesn't need to fill. It's easy to fill, and it wouldn't be a problem either way. So I can tell you a few emphatic things. Chasing it up here was a mistake. Chasing it down here lower was a mistake. This is Pfizer, for crying out loud. Let's look at its parameters. I mean, it does have a business outside of COVID, in fact. So this is, let's see the key data. That's easy to see. The price to earnings ratio is 25. If you look at any of the other COVID plays like Moderna, and Sorrento, Novavax, they have no income if not for this COVID thing, and they don't have anything on the market yet. So if it doesn't come to market, they are SOL, so to speak. This one has a pipeline of other stuff. They have existing drugs. It's Pfizer. The price to sales is 4.5. So there's only 4.5 years worth of sales baked into the current stock price. The forward PE is 12, 13. So current PE, like the last 12 months, if you take the price to the earnings ratio, is 25. Not super cheap, but definitely not expensive. If you look forward, they anticipated dropping. So either they improve margins or something has to change in the sales mix. Huge market cap, so it's a legitimate company all by itself, COVID or no COVID. In fact, the COVID thing is not really a carrot yet, and here's my thought. So income statement, stable, not a growth company. So the PE is important versus the sales growth, the aggressive growth rates. So the fact that they're going to bring a good, solid vaccine to market, hopefully sooner rather than later, is not going to improve their margins right away. There's no way they're going to be allowed to profit off of it. So the government might subsidize some, but I can imagine that it's going to be more of a humanitarian effort, and there's no way they're going to let them to leech off of the people who need it the most. So for a year, I don't know, I'm putting a question mark. How long before they can say, all right, let's turn up the volume on the profitability of this bad boy now that it's no longer a lifeline for the world, now that it's something that people want to do just in case later on. So I don't know when that number is, if ever. So is it going to be a big money maker? I don't think so, but I'm not an expert. So let's look at the chart and see if we can get experts at levels. So looking from the daily, 1 year's worth of business here, there is support in 237. First line of the defense is 38, 37, and I would buy the dip around 36, anywhere around 36, if not 37. So this is not enough information, and I'll tell you why. I tell you why this is not a good place to start longs. To lay out the geography here, this is the COVID crash. We fell into the pandemic shutdown of the world, and then we realized, wait a minute, these are the companies that are going to bring us out of it. And then they even didn't believe it, and then they're coming back. That's way too much action for stable stock. So let's go to a weekly chart, see if we can slow the action down. So now we're looking at 5 years worth of data. So now we can get smarter with things. So look at how mechanical this sell-off was. I call it a sell-off because it fell pretty quickly, 7% off of the spike in mere hours. Why? Because that was a place of an accident before. So now they got the jitters out. Anybody stuck up here had the chance to get out. Did they? I don't know. That's a lot of volume. So maybe they did. This is a weekly candle, mind you. So it includes Monday and Tuesday. And the week is not over. So it may come back and revert higher. Okay, so if I do it a daily and zoom out a little bit, sorry about the noise outside. I did not organize it. So look how neat it is that you come to the ledge. So all these people are still stuck up here. So this is going to be overhead supply, whatever you want to call it. It's going to be a place where it's not easy to start longs the first time around. It's going to have to come down, consolidate, build a better base, and attack it another time. There's this working against you. It was an extreme headline. So I don't usually chase headlines like these. I'm not a professional momentum trader, whereas like I live and die by buy high and sell higher. I wouldn't mind catching a momentum trade, but that's not what I chase. So check this out, these 2 weeks, and it's not a coincidence that they're right here. And look how important these lines have been. Do I have lines drawn there? No, but I do have the whole box. I should draw a line right there, right in the middle. So this is an important zone for future reference. And look how pivotal they have acted around them. So this zone inside this bigger zone is important. They have a lot of action in there. Let me take those out. So this is the volume profile. It's telling me that for the last, 5-6 years, they love this zone. That's the good news. It's a base. So this was too high. This was too low. Somewhere in the middle lies the truth. So red and blue is like a regression line. And if you hear the reversion to the mean, this is reverted to the mean. It was too high. It reverted to the mean, overshot thanks to COVID. Reverting to the mean is trying to overshoot. I think this is too tough. So starting longs here was a mistake. Still remains to be seen if indeed it turns out to be a mistake. I mean, they could just bounce here tomorrow and rally to no end. So if I were to do anything, I'll put a trigger here, say, hey, you know what? Let me know when this is beat. In fact, let me know when this is beat. I'm interested. Those are two fade spots. So if I'm an active trader and I bought longs here, I'll get out one here, one, two. Otherwise, let me know when it gets down to here, and I'll look at it from the buy the dip perspective. So credit put spreads or buy the dip, however you buy the dip. Swing trade up. That'd be interesting. All right, so we looked at the fundamentals. We looked at the technicals. What else can we look at? Okay, so I have a tool that I'm practicing using it. So let's go to the profiler. This is from Market Structure Edge, and should give me a sentiment indicator of sorts. I'm not sure how. Sometimes I don't find any information from it, but let's see here. So if I wanted to do the reversion to the mean trade, to buy it when sentiment comes to 5 and then comes back to 5, I don't have any edge. Let's say if we buy it at 1 when everybody hates it, I still don't have an edge. Boy, what if I just ride it shorter? Yep, I have an edge a little bit. Better edge. Okay, so I don't have an edge. I should just not do anything with it because this tool is not giving me anything actionable here. Of course, I'm not. Okay, so buying the uptick, I guess, could work. What does that mean? So this measures sentiment. Let me put it in visual. It's still new to me, so I'm learning it and I'm sharing my findings. So sentiment is that yellow line. Let's take this out. This is sentiment, and this is the stock price of Pfizer. And they measure sentiment however they measure it. It's consistent, and it goes from 1, it goes to 10. And some stocks like to be bought at 1 and sold at 10, and you do well with it. And I was trying to find a correlation there. The only thing I found is that if I buy an uptick when sentiment goes from 1 to 1.5 or 2 or 2, whatever uptick I get, and then I sell the downtick, I should do better than just willy-nilly going in and out, just slightly better. And even then, it's not a good indicator. So in this case, I wouldn't use it as a trigger. I'll just use it as a, hey, I'm looking at it. Let me see if I'm making the flagrant mistake. Am I buying it when it's way up at 10? Maybe not. So there's no edge from this particular tool here. So I will stick with my statement from the chart and the fundamentals. It was not a place to get long. Now I have two levels of resistance if I wanted to short it intraday. I have a level where I can buy it for swing trade up. So these would be my notes on Pfizer. There was another one. Was it Lilly? Lilly was in the news same day after hours. Man, now everybody wants to. The elections are done. So here we go. Lilly, not a place to start longs. It's going back into a level that has served as a ledge. So they fought it, and then finally they lost it, and now they're coming back to the mean. So yeah, they could swing higher, but I see a lot of failure points that need to be taken out. So onus is on the bulls. Show me the money, so to speak, right? So it's a level that has played a role before, like here. Look, if you follow the dashed blue line, that's current price. So it was a big roof, breakout, floor, so to speak, floor, lost floor, and now we're coming back to it. So prior resistance become forward support becomes forward resistance. So you can see that resistance, support, resistance, breakout, support, breakdown, resistance. So we'll see. The bulls have to prove that they can come back to here and then take this out. They can do it, but I would rather see them do it than fade down to 140 for Lilly. I don't know the fundamentals on Lilly. I guess we can spend a minute since we've already spent so much time on this. Okay, they're not growing sales. 23 PE, almost exactly the same as Pfizer. Boring. Okay, boring is good sometimes. You can forecast boring. All right, next signing out.